everyone, hope you're well. It's Friday, it's the 11th of July. Welcome to the proptrade.com, your best and most comprehensive prop trading company out there. Come and join us if you're new. We're here to help you using simulated accounts with live data from live liquidity providers, 1 or 2 step challenges. And then you get your funded account, and then you can get paid. It's Friday, it's payday. Our guys, our funded account holders, have been paid today, or getting paid today. They obviously don't get paid at once. It's processed. Everything we do in this business is processed, and the most successful traders in the world are very, very much process bound. So let's just, I've got the calendar here on the left-hand side of me, on the right-hand side of me, turn you're looking at. Remember, yesterday's initial jobs came in better than expected. We had a bit of a tick up for the dollar. And then, as ever, the markets were jolted by the president. Trump comes out with an extra 35% from the 1st of August on his biggest, nearest neighbour to the north of him in Canada, Mr. Mark Carney and his team. 35% on Canadian imports from the 1st of August. If the Canadians retaliate, we will retaliate as well. Blah, 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 blah. There we go. Obviously, the CAD got hit. Dollar lifted a wee bit. Didn't help our dollar CAD trade. We'd already been stopped out earlier in the day. It was a bit of a small loss, wasn't it? Yeah, 15.9 points on that one. Anyway, so jobs better than expected. Continuing claims continuing to decline. Waller, interestingly, remember we talked about Waller, watching what Chris Waller had to say. The reason Chris Waller's important is that he's probably one of the candidates to replace Mr. Powell in May, when Mr. Powell turns his term as chair of the Fed comes to an end. Not as perhaps dovish on or hawkish on rate cuts in July as many were expecting yesterday, Mr. Chris Waller. So same with Daly. So still talking about data dependency. So yeah, on we go into the summer recess, or the summer doldrums as we get on. Next week's key, we'll come to next week in a minute. But this morning, we've had, just gone through the calendar, we'll go to the charts in a minute. Obviously, I'm sure you're all aware, a new record high for Bitcoin overnight, and we continue to move up higher this morning. So a bit of a disappointing data from the UK. It was a bit of a surprise coming in as a decline. Remember, a minus is a decline, not a growth. So we declined 0.3 in April as the tariff announcement came through. Since then, the UK have this preliminary, that's all it is as well, preliminary, can't say that, Safran, preliminary tariff draft agreement with the Americans, but it didn't help May GDP. It also came in negative. It was expected to be just trip over it into 0.1% glacial growth in the UK. Previous Prime Minister, I've forgotten his name now, Rishi Sunak, was obsessed with growth. Starmer and his embattled Finance Minister Rachel Reeves also convinced that growth is the way out of things, but here measuring by industrial production, manufacturing production, and the GDP, it's not happening yet. So we had a negative May. That was a surprise. Variance of 0.21%, but the key thing is it's negative. It's gone into contraction. Manufacturing production 1% of contraction. A bit better in April. Wasn't as bad as expected as the first reading, but still in contraction. Still negative. Trade balance still negative, and I got a wee bit bigger as well. Inflation in France, big CPI data next week. Remember, we had the Germans yesterday coming in confirming what was expected, a little bit higher than expected. So it's still ticking around. We can't ignore it completely. And obviously, as we've seen, the impact of the tariffs is yet to start biting in the data. So anyway, that was this morning's data and update from yesterday's action. We also had a 30-year bond auction that came in hotter than expected. Remember earlier in the week we'd had the 10-year coming up much higher than expected, 436 from 442 last time, but down, but as expected to come in around about the 420 something. But remember, these auctions of this is people investing in the US economy. If you think of it like that, the US government, they had to give a higher rate of return before people would actually buy them, and that's what's coming here. 4.36 for the 10-year and 4.88 for the 30-year. Obviously, you're committing longer, so you get a higher return because you've committed for 30 years. Get paid every 6 months. If anybody wants a little workshop on bonds, let me know. I can do that. It's critical to the whole financial market, the whole financial setup, but it's not traded a lot on prop trades or on prop trading companies or indeed standard CFD brokers either. But it's quite a key sector. So that's really the wrap up of the last 24 hours. How has the market reacted to the new tariffs on Canada, and Trump continuing to talk hard talk against Brazil as well, talking about Bolsonaro? I couldn't remember his name yesterday. The guy that's former prime minister, the Trump of the tropics, they called him, Bolsonaro. He's under scrutiny and on trial, and Trump's calling it a witch hunt of his favorite right winger, or second favorite right winger in Latin America. But anyway, so we got to new all-time highs this week for the S&P 500, and again yesterday we inched high. If you look at the daily time frame, we were inching higher yesterday. Trump's announcement came after close. I think that's why we've gone down. Pretty sure it was after close. Yeah, there we are at 1 o'clock in the morning. That's my time. So it's after close. So we were down. We're long this. It's still open. We were out with the money. We're just about. Well, we're still out with the money. We're down here now. It's not much though, but we're out with the money on that particular trade. And if this breaches this significantly, this key 50 period moving average here on the 4-hour time frame, we'll be closing this position before the day's out today. So there we go. I'm going to try and keep this this chart set up. So if you can see the charts, okay, I'll leave it like this with my big head stood next to it and see what sort of getting any different response to normal. But this is the S&P 500. If you can't see, or should I make myself smaller? I don't know. Any votes? Anybody here to vote? I don't know. We had some problems with the audio on YouTube yesterday. Hopefully that's okay this morning. The audio's fine according to the data I'm getting back here. Yeah, so stocks are down. Let's just go through the data actually while we're here. Sorry. The reason we're here is in 5 minutes is the jobs numbers out of Canada. Normally, or sometimes they coincide with the non-farm payrolls out of the United States on a Friday, but obviously Canadian dollar very much in focus given what's been going on with those that tariff announcement yesterday. And actually, let's go back to this, bring the dollar CAD up, as that's the one that's in play. So dollar CAD currently trading at 136.90, so we're back under that key 137 level. But as you can see, the dollar's come back this week. This is the 4-hour time frame. So under the breach of 136 we had earlier in the week, and since last week, in fact, this is all of this week, since Friday last week, we've been over the key, back over the 136 level, but capped by the 137 level. You see how we've spiked here and come down, spiked and come down, spiked and come down, spiked and come down. This was the big lift yesterday following Trump. You see the same 1 hour, 1 o'clock in the morning candle up to 137. But again, as you can see there in the 1 hour, it's even better demonstrated, isn't it? That we haven't been able to breach 137. So we're sideways at the moment, still bid following that shock. Well, not shock, but announcement from Trump on dollar CAD. But overall, if we go to the daily time frame, the trend still remains quite negative. We're sort of fiddling around, I've been saying all week, up and down the 20-day moving average, more to the positive side than the negative side following last week's non-farm payroll and the big rally we had on a Monday. So Monday, big strong up day, down day Tuesday, up day Wednesday, down day Thursday, and currently up day Friday, as you can see, but we can't break out of that channel. So we really need to breach 137 on an end of day basis with a nice strong body of the candle closing above there, pulling us away from the flat 20-day moving average and testing the 50-day moving average, which sits at 136.46. But as you can see, every time we got to the 50-day moving average, we've rejected it. Rolling top there, flat, but there's a bit of consolidation going on here through the support we talked about before at 136. So watch that today. So let's just drill down to trading timeframes out here on the 5-minute chart. So we've been down this morning from 130. See the exaggerated, or how the 137 resistance works. You know, bouncing off, bouncing off, bouncing off, bouncing off, bouncing off, bouncing off. Big move down here from about 11 o'clock my time into the low of the day here at 136.86, which is where we are now. Not the low of the day, but the low of the European session, I should say. This was obviously the rally we had on Trump's announcement. So as you can see here, we just put a quick fib on here before we. So that's the impact of Trump's announcement. That's the range we've had there. And as you can see, we're back. Well, we've given up half of that impetus. Markets always overreact and underreact. So there we are. We're right at there's the 50 area. Next downside support. See how that, as if by magic, the bottom of that candle there at whatever time it was in the morning sits right on that 61.8 fib. Remember, the 61.8 fib is the key. Oh, you can't see that, can you? Oh, right, hang on a minute. Can you see it now? Yeah, sorry. That's because I've got the charts like that. There you are. There we are. I'm not sure that you need to see all of my ugly mugs. Is that any better? No, that's better, isn't it? You've got less of me and more of the chart. There we are. That's better. You still got me. You'd still see full of me. They'll have to see more of me. I'm going to get a new microphone and stuff. I'm going to upgrade the hardware here. So yeah, so that's your next level. There we are. The data's come out, and it's obviously better than expected, and the dollar's come down. So we just breach right through there. So there we go. See what happens? See what happened there? As if by magic, we've gone back to where we were before Trump's announcement of tariffs, or we've gone to test it. We haven't actually gone back to it yet, but you can see what's happened there. This is what markets do all the time, guys. And it's a lot of it's to do with where stops are, where orders are, because all, as I said yesterday with Aurora, all the market is doing is trying to fill all these orders that are out there. So see what we've done. We've gone back down to this 130 whatever it is, 136.55 zone on the day. So let's have a quick look at the data. Let's go to the Forex, the factory calendar. There we are. Where are we? Friday, employment change, much better than expected. There we go. 83,100, much better employment change. That's going to boost certainly Carney's response to anything that I haven't actually seen an official response from the Canadians yet. From Trump, but if we look at the well, you can't really tell on this one because of the. I'll just move this down and move it out of the zonal area. You can see, there we go. Get rid of the hoo-ha that was. You can see what a strong number we've come in with, 88 to 83,000. So here we again, just like in the States, remember the brown is the forecast. We took the forecast off. Oops. You can see that we've been better than expected. Put the forecast back on. These are the forecasts. So jobs gains, you know, through. Oh, hang on a minute. What's that gone? It's gone back to 23. Sorry. There we are. Jobs gains were better in the second half of 2024, and we've been a bit disappointing in 2025. But this is quite a significant uptick for employment change in Canada. So 83,000 compared to 8.8 thousand just last month, and less than that 1,000 was expected. So much better than expected. Again, positive last month. It was actually negative last month before in April. I thought it was better, but that was obviously the immediate impact of the tariffs. Again, you can't see that, can you? That's a bit of a disappointment, isn't it? There we are. There we are. That's what I'm talking about. So much better than expected at 83,000. And from, sorry, that's last month, isn't it? What am I talking about? That's not date. I've done 83. So 83 is going to be up here, isn't it? This month. So it's been better than forecast last two months, and significantly better this time, all the way up here. Let's see if that's going to refresh now. The data's come in. Indeed, it has. Has it? I think it might have done. Let's have a quick look. You can't see it yet. Sorry. There we are. And we go to, there we are. There's the, and if I move that over, there we are. You can see that. What a huge strong number we've got in for Canadian jobs. So that's going to empower Carney and his government for a quick cold rebuttal of Mr. Trump, no doubt. See, the unemployment rates come down as well by 2 ticks from expectations, 7.1% from 7% last month, under 7% again. So again, if we look at the rate, and that's got the 7%, that's from July. No, it's July. You can see it's been rising, but we're under the psychological 7% again. So it's under expectations again, as it was last month. So 6.9%. For the July unemployment data, but you see it's been rising for the last couple of years from these full employment levels, around about 5% in Canada. So overall, that's really positive Canadian data, and the dollar consequently, or the Canadian dollar is doing better. So consequently, the dollar itself, US dollar, is back under pressure against the Canadian dollar. So that would be my target down here. This area we were before Mr. Trump made his announcements earlier. So these are the 5-minute candles. Remember, guys, that's the one beforehand. This is the current 5-minute candle that's forming. Again, can you see that? Yes, you can still. So if we go down to 2-minute, remember, if you've only got a standard account and you can't trade, you want to trade the news, you've got to wait for 2 minutes. So there's the 1330 candle when the data actually came out. So again, what was the trend telling? Well, the trend was we'd had a kick up, hadn't we? I'd be looking for a break of this low here, and that happened at 28, 2 minutes before. So you can't trade for that one. There's the data to 32. There's the follow-up. Come back there. So you could have got in there at 1332, and you're already well in the pips. So you could have got filled here at 136.73. And there's our target, that low. We're in a pips fit. So there's 20 pips on the table there for you if you'd set this up ahead of the data. Likewise, if it'd come in badly, we could have gone to, you could have had the test of the, if I zoom this right in, we could have had a test of the high we got to. So we inversely, we could have had a sell stop up here to sell it when it got to this, and it could have broken through it. Again, now there might be some. That's our short position filled here to this down level. That's what I'd be doing, and then perhaps some buying at this level now. But that's really strong Canadian data, so it may may move as lower than we were here yesterday. This is yeah, this is yesterday into close. So this is a close of a weekday. You see, we were down there yesterday, so this is our close. So that data is better, although we've had the impact of the expected tariffs, so they've compensated, if you like. But as an intraday trader, you got your target here. Thanks very much. Yeah, it's got a bit lower here on the 2-minute chart, but that is allowing you to trade that without having to pay the extra for the trading the news or taking the problem, guys, when you're trading the news, is you don't wait for the 2-minute candle. You don't even wait for the 1-minute candle. You try and trade on the tick time frame. So if you'd had your stop loss down here, if you thought it was going to go long, you'd have been stopped out, wouldn't you? But that's a nice. This is the 1-minute time frame. See, we just collapsed completely. There's the 1, there's the 2. So you could have got in here at the end of the 2nd minute, as I say, at 36.70, or whatever it was, 72, 71, and all the way down here to 36.53. So best part of 20 pips there. Take the spread off. So you've got 18 pips easily on that move. Thank you very much, and off we go. 16 pips a day, guys. 16 points a day. and you're in the money. It's happy days. That's all you need to do. Most people don't do that. Most people keep going, keep trading, but there you go. So you can see the buy, the immediate bounce here in the first. Well, it's obviously only the minute chart, but we've bounced off that target level we were talking. I don't know if I can zoom that in enough. There we are. We've bounced off that target level, the low of the pre-Trump announcement, and that's all running quite nicely. So again, you see massively oversold here. You can see the RSI massively oversold here on the 1 minute time frame. Remember indicators, guys. I know a lot of you are very anti the old technical indicators, but they work as well on these short times as they do on the higher time frame. So massively oversold here on the MACD. We went all the way down to 7 before we got some buys in that one. But anyway, let's go up to the bit more manageable, at least 5 minute time frame. There you can see that on the 5 minute time frame a bit better. Similar thing. So again, wait for the full 5 minute candle to complete. There we go. We got to the target. Thanks very much. That's how to trade the news without having to, trade the news or have it, even wait for the 2 minutes, because then you fade it, and that's what's happening. How we either fade this level. I buying here and it's going to drift back up, or this trend is going to continue to the downside. Remember, the cash markets, the real stock exchanges in Canada and the United States haven't opened yet today. It's still an hour or so, 50 minutes away from that. Obviously anything could happen in the meantime, but CAD very much bid. If we just put in CAD crosses here on the and it'll show all our pros. So you can see CAD will have benefited from this across the piece, undoubtedly. That was strong data. There we go. So CAD yen rallying, similar sort of move. You see the move. Obviously, there's no Trump announcement impacting that trade, but that's up. CAD Swiss will have gone up also. There we go, from looping down. We're back, interestingly, back into again. See how we come back to a key level. These sort of pivot area we had here from yesterday. Obviously, upside target on the Swissy was a bit high. There we are, triple top. So that's suggesting it's a bit too high. So 58.36 might be a step too far, but we are now back to 58.30. So nice move on the CAD against the Swissy. Aussie, similar sort of move to the dollar to the downside. And again, you see how we've tested these lows from yesterday, 89.85. Big breach to the key round number .90. I think we had some target. We trading this, weren't we? Aussie CAD was positive, I think, wasn't it? I can't see it in there. I've written it down somewhere. Aussie CAD, yeah, 15 points, got to target. I think that might have been half of one that's still open, so perhaps we've come back to hit our stop loss. I can't remember. I wrote it down, didn't I? Anyway, we'll come back to that in a minute. But you can see CAD's really big benefit. Euro, similar move to the downside. These lows from yesterday being tested nicely on that really strong data. Kiwi, there we are, through a stop loss from our previous trade, down. And pound, CAD, I've definitely had this one up because it's my bogey pair, and we lost together. We lost 15 pips on this yesterday, but I can't remember whether we were long or short on it now. To be honest, it's just another trade stop loss. There we are. There we go. You can see there's my entry from the 9th, and it's just gone bar. I think I pulled the stop loss up, didn't I, on that one? I think. But anyway, that's continuing. Interesting. See, that's generating new lows. So it's suggesting the weakness of sterling is more given that weak GDP we had this morning. So that was sterling CAD. That was the pair to perhaps be trading today, given that combination of data. And here on the 5 minute trader, it's all you need, guys. Here at 11:50, we're going. Didn't really move down. There's the. I'm guessing that's the 7 o'clock candle. There's the. Can you see that? Sorry, let me zoom that up a bit. There's a 7 o'clock data where the UK GDP missed. Obviously, over the Asian session, not a lot going on. There's not many sterling traders about. There's not many Canadian traders about in the Asian session. The UK wakes up. The traders get to their desk about 6 o'clock. I'm checking at 7. There's the data at 7. So we've been down. It's been down every day ever since. Slight retrace, but again, only to half of the down candle here on this 5 minute time frame. Yes, we were over our 50 and 20 period moving average, but since 11:15, and then more importantly, See that? So there's that low of the morning there. Here, that was the other candle to have entered on. If you'd got in here at 11:15 when the system would have triggered, that would have might have been another possible short entry at 11:30, these round numbers, and then definitely you'd have had it there at 11:55. So before 12 o'clock, we'd ramped up our shorts, and then we had this three black crows candle set up. So down, little retrace, three black crows down, added either on all or all of those. Congestion, sideways action ahead of the data. Data comes out here, or ahead of the data, we go down again. We go down again 5 minutes short, ahead of the data, and then bang. And that would have, if you'd been short all of this, happy to get out at this level, not be too greedy. But obviously on the higher time frame, we've had data that's moved this pair in this direction, because we've had negative sterling data, the pound data, when we've had positive Canadian data this afternoon. So the higher time frame trend should be very much to the downside. Now you can see that in the hourly candle. So breaching this week's lows here. This is July, so we've now plumbed to new lows for the month for the dollar CAD on that combination of bad data. You can see this morning's 11, 12, and now 1 o'clock candles moving down quite significantly from that 7 o'clock candle here on the weak GDP data from the UK, as we tried to move up earlier. So yeah, there we go. When did we get in on this one? I got in here on the dollar CAD bites my bum again. So there we go. We were long. I think I'd pulled this. This stop loss was only pulled up yesterday. I think we were stopped out here, didn't we? It was down here before, but anyway, there we go. Down again. So that's one to watch. If we look at the 4 hour, what's that? Where's the next levels? There we are. We're back into this cluster now. There we go. See what happens? Time repeats itself. Price action repeats itself. Time, price levels repeat itself. Can you see what's happening here on the higher time frame 4 hour candles at 184.46? It's a low of this current candle at the moment, but it's a bit of a cluster zone here, and we got a zone here, and we got a pivot area here. So we could, that's the next level below there, 184.44.7, and we've already tested that. The low of this move so far is 184.35.8, which takes us under this cluster and at this sort of pivot area here as well. So obviously the next level to look down, if it's going to continue going down, obviously you don't know, is through here. That's that next level there. There's a bit of a minor one there, 184, round number again to 184. See how it's playing out all the way back here to whenever this is. This is May. This is a low here on the 11th of June, through here, a low here on the 22nd of June. So yeah, 184 cannot be rolled out for pound CAD on those higher time frames. Now we've got to step up again on an end of day basis, which is, remember, that's how I trade traditionally. There's that speculative long on whenever it was Tuesday. That's not played out. So that's a big rejection of high prices, and that's a short. That should have turned short. I'm sure one of my systems would have gone short on this yesterday, plumbing this low, and certainly they'll be adding to it today with a target down here around that 183.50 area. So you can see on the daily we're another 50 pips to the downside on the daily time frame. Now 184.25 is that next level down, which we've been within a few pips this morning. So that's how it goes, my friends. So strong Canadian data, weak US data, weak UK data today, and that's what happens when you've got a pair that's in balance. When you're trading forex, that's the thing. You've got this balance. You've got this scales. You've got strong currency, weak currency. The pair is only going to go in what the price of the pair is only going to go in one direction, and that's been down. Looked like this was a big sell-off here we had on the second. Looks like we were running against it here. We delayed it getting in, but you can see we didn't get over the first major fib level. So although my system triggered, it got it wrong here on Wednesday, and whenever it was, the 9th, Wednesday. Very much wrong, very much against what these technicals were telling us in simple terms, but it's too early to tell. It was yesterday really, as we got stopped out with that long, that's definitely triggered short on one of my other higher time frame systems there, and very much in the money for Friday with potential adding to its position here on Friday. So there we go. That's pound CAD and my bogey, one of my bogey currencies. Losing trade on the systems I share with you, but my other system would have is very much in the money on that one, I would guess. Well, I'm pretty sure it is. Anyway, there might have been a feed through for the oil price, obviously with a strong Canadian dollar. Obviously, oil, kind of a big. No, it's not. Still sideways action. Yesterday's down day was first in 4, and we're still holding $67 as we've talked about for a while. So really, oil continues to go sideways despite all the, the Houthis sinking. Not sinking, but attacking 2 freighters. The Saudis talking about last weekend. Remember, we had this big talk of bigger output production cuts. That's lifted oil earlier this week. Worries about obviously the Iranian situation didn't really obviously this rally here hasn't really filtered through. So 67 and $70 remains the range for US oil WTI intermediary. Let's just go back through everything else. Let's start at the top, and obviously the news overnight that crypto, and we've gone to new all-time highs again here as we speak. 117,700 for the mighty Bitcoin. Very, very strong week. Expectations of the Trump administration and his businesses talking about ETF launches. It's very strong spin, so somebody knows something somewhere. I would argue for a 3-day move like that. It's a new all-time highs here, over 117,000. So that obviously, let's just stick in 120,000. That's the next big round number, isn't it? On this chart to the upside, which could come at any moment over the weekend potentially. Let's make it 2 because it's a nice round number. Let's make it 120,000. 120,000. Who would have thought this? Who would have thought this 7 years ago? I shared this yesterday, didn't I? This time 7 years ago in 2017, he had a rampant move during 2017 Bitcoin as it rallied from under $1,000 at the beginning of January to over $7,000 by the end of December. 1,000 to 7,000, thousands of percent move, and here we are, and that's at $7,000, and here we are at 100, and we can't even get that on the scale, can we? 112,000 has been breached, and we're now trading at 117,000 for the mighty. Yep, it is Bitcoin. So those of you that are holding it, congratulations, well done. Big breakout here from these highs. Can it hold? Well, certainly people who have been buying it this week might get shook out next week if it shakes out. But anyway, it continues to hold. And as we've been saying for a while, not a lot was happening, but we had nice firm base support here, the 50-day and the 20-day. I've been saying this for weeks, haven't I? And there we go. Breakout occurred here on Tuesday. Follow through on Wednesday, and on Wednesday, follow through on Thursday through that new all-time high, 112,000 and 117,700. As we speak, obviously the other big mover on the back of that has been Ethereum. Don't normally show you Ethereum, but there's the Ethereum heading for that, eyeing that 3,000 level again, but a very similar pattern you can see here. Positive Tuesday, in fact, Wednesday, Thursday, Friday for Ethereum through this high yesterday at 2,820 for Ethereum. Again, similar, not completely the same, but similar 20-day solid base and a breakout. That's a solid setup. That's a nice setup here. And in the setup period, the biggest candle was the positive candle. It took us over 50 period moving average. So, waiting for that to go. Some buying opportunities here at the 20-day, and then bang, bang, bang. Not guarantee it happened, but the key thing was the breakthrough. That's 2,820 yesterday. We ran to it, and then this positive day today. So very positive. Also, energies we looked at, exotics we don't really look at, unless somebody wants to have a look at the real or the. Actually, let's have a look at the real. Given the announcements from that's not on here. No, it's a Brazilian real. do we actually offer it? Sorry, I should actually. It doesn't look like it's on here at all. No, there's no Brazilian real on that. I should know that, shouldn't I? Sorry, excuse me for that, my friend. So the pros. Sorry, let's actually we've seen that. I'd look at the CAD because that's the major mover there. Let's just go back to how the dollar's doing itself, broader range. So Aussie up today. It's a red candle. Sorry, green candle. Big positive day yesterday into some target area from last month. We'd had it 66. 66.60 or 65.60, I should say. Dollar CAD we've had a look at. Swissy 79.60. So it's still petering out, really. You know, as we said yesterday, it looked like it was coming back, the dollar against the stronger Swiss franc, but it's not. Although again, the biggest of these consolidation candles is that one, and that one there at the end of June as we continue to plummet, and before we touched new lows at the beginning of July at 78.70. So a bit of congestion going on there at lows, but again, you know, the trend hasn't changed at all this week. Bit of consolidation, and obviously that 79.40 zone where I think we got out a few weeks ago now is the support area going into next week. Yen, interestingly, dollars benefited again today, so the weaker yen, weaker story, yen continues. So sterling week, yen week today, 147 is being tested as we speak for dollar yen. So dollars up against the weaker yen, down against most other currencies at the moment. So 147 is where we trade right as we speak. So the better week for dollar against the yen continues. And again, this is more of a story of weakness in the yen. RSI rising nicely. So again, I think we were long this one. We got stopped out because we rammed our, yeah. We got our stop loss a bit too close. 3.35 pips we won on the last dollar yen position. That was the second half. Yeah, we'd made 19 pips on the first half of the trade and 3 and a bit pips. So we made 20 pips out of this move this week, which is a bit shocking, really. But anyway, as it's continued to rally. But there we go. Dollar bid on what obviously Trump had to say yesterday with regard to inventory. 60.60 again for the Kiwi. Again, we were long this one. No, we were short this one. We were short there. We were strong there, the dollar. But then you can see how again, great example of how the 50-day moving average provided support this week. Yeah, we were short on this day and it just didn't happen. We got closed it out. Kiwi, what do we do with the Kiwi? Pound Kiwi, dollar Kiwi, minus 40 last night or this morning as it's come up. That's right, it went dollar. Hang on a minute, we were long this one. It was almost been stopped out before. Let's just go back to the hourly, see what I'm talking gibberish. Again, I'd moved the stop loss down. Oh, that's right, we were trying to go short. We were trying to, and it hadn't worked out, so I'd pulled the stop loss down, and then we got took out yesterday as the Kiwi was moving up. Dollar was weakening before Trump's announcement here at the 1 o'clock on the 1 o'clock candle. It took us back down, not even to entry at the moment. But anyway, I was a losing 40 pip position on the Kiwi. But I say the end of day position doesn't really change. It's found nice support at the 50-day moving average. Strong day yesterday, giving some of that back today. And 61 being the upside resistance zone. Before that, we've got this zone through here at 60.50. So some very simple round numbers for Kiwi traders. Euro one back under 117, 116.85. Rollover continues, but we are now into the testing. Interestingly, of the can you still see that, guys? Yeah, of the that bit bigger of the 20-day moving average. That's one to watch as we go into the close tonight. 116.53 now, the 20-day moving average. So that continues its sort of 10-day decline from 117. Oh, not 10-day, but when we first got to it here, 1, 2, 8, 9, 10, it's 10 days from the 117. Actually, the decline is really sort of 6 days here, isn't it? 7 days here. But 117 has been rejected. Will 116 hold, which is all the way down here? But first support comes here at 116.55 on the 20 our 20-day moving average. Interestingly, we're under the 3 and the 5 this week on the moving average. See the orange line and the 9 and the 5. That's the 9 is the orange line. The green line is the hope you can see that is the 5-period moving average. So sort of sloping down. Not a lot of action this week. See what CPI brings us next week. And sterling, we talked earlier, back to the hugely significant. We talked about this all week, haven't we? The 20-day was holding. We had that first breach here on Tuesday, sideways Wednesday, down yesterday and under. We were saying this last night. Remember, we were under the 20-day. That was what we were looking at. Haven't actually taken that short yet. The system would have triggered here on the 8th with a small position. It might have added again last night. I'd have to check that, but that's looking like a healthier move down today for that position. So that many will be closing at 135. Hugely significant. I've been saying this all week. Remember, guys, 135 zone. So quite a significant move down today for sterling. Obviously, on the back of that GDP numbers and the conclusion of the 3-day summit with Macron and Starmer agreeing on not much trade announced, but a 1-for-1 migrant. They've got to do like a test of sending people back to France. As long as the French can send somebody with some connections to family in the UK as coming in. So again, see how all that plays out as a deterrent for people just trying to get into the UK unannounced or unaccepted or without any documentation. But if you can't have any systems abroad, how can they apply to be either migrants or asylum seekers? Two different things. But anyway, let's not get into that. So this trend down continues. 135 key support there. You can see that quite clearly. I hope you can see that quite clearly. To the downside for sterling is the run over. Small positions were added here on Tuesday, added 2 again yesterday. Perhaps a bigger position taken tonight, but see what it is. It's Friday, wrapping up the week. So dollar generally weak. The trend continues. We can see some movement this week in the opposite direction against sterling. The euro's come off, but less so. But the trend is definitely there. Yen, again, trend is that way. So dollar, there's the result of the week is the dollar is coming back a wee bit. Let's put that line on there like we have on sterling. So it's come back, but is it just a bounce, or is it indeed just another leg of this WM formation? Are we moving higher? We've got these triple tops here on the yen, sterling and euros, definite sort of lowering, nice, relatively smooth candle, top angle, I should say, to the downside. Sterling, similar, bit steeper there. If you zoomed in a bit more, that's the only reason that looks a bit steeper. But you can see, so a bit of strength this week for the dollar. Will it continue? Well, if you look at the Swissy, it's already sort of petering out, isn't it? But that is the strongest. The dollar CAD, it's up, but again, it's sort of petered out a bit. Obviously, they're very much in focus now, given those announcements on trade. Euro's obviously still yet to crack a deal. That's the biggest one everyone's looking for to finish. Obviously, the yen hasn't got a deal. Japan hasn't got a deal yet. They've been extended from Wednesday out to the 1st of August. Australia similarly, and Kiwi similarly remains relatively well bid against the weaker US dollar. And finally, well, we'll come back to the end of the season in a minute because we've still got a position open and what I've got open and what might happen tonight and next week. But here, as far as the markets, the charts are concerned, 3355, 33,355. We trade for gold today. That's 3,300 level has been. Didn't mean to do that. Has been tested. I should lock that in and make it a line rather than just a ray. Anyway, I'll do that. There's 3,300, the big fat purple line on there. So we were down Tuesday. We've recovered Wednesday, Thursday, and now Friday we're above the opening positions we had on Tuesday and Monday. So we're at the high for the week on the gold market. Can you see that? Don't worry about that. We are. So we're at the high for the week at the gold market, and back to the highs of the month, or around about the highs of the month. So finishing the week strongly in Kintney, which is not unusual. We can have strong Fridays for the gold market, and you can see that moving quite nicely. This morning we were up, then we declined. Look, that was a big strong down candle there that didn't happen here at, oh no, it was yesterday what we're talking about. Yesterday, not today. At 2 o'clock yesterday afternoon, didn't happen, got taken out, and then that's, if your stop loss was there, you're going to move that. You've been taken out there and then gone long here, as we've made new highs this morning on that Trump announcement, and then we followed through. So gold, understandably, has gained on the more uncertainty following more Trump announcements, so particularly around the Canadian economy, and talking about 35% tariffs for Canada. Indexes, we are still, it's just gone 2 o'clock, so we're still half an hour away from the cash open. The SPX is the only one we still got open. We closed the NASDAQ. We're back to our entry area. Watch that into the close today. We're down a bit for the week, I think, at the moment. About, I can't remember the day before, 60 points down, I think, for the week. So I might have a losing week this week. But that happens, obviously. Well, see how this runs at the moment through the cash session. UK 100 was doing really. There we go. It's another classic. Ramming your, pulling your stop loss up. So we got in here, down here on the 30th, and we got to target one relatively quickly. It's the hourly chart. Remember, let's go up to the daily time frame, because that's how it was, why it was taken. We got in here on the 30th. We got to, it took a while to get to our target here this week, the 8th, nearly a week later, and then we've moved up, and then that's our target here, this one here, and then we've just pulled the stop loss up. Stop loss was down here originally, pulled it up to entry, pulled it up to T1, and trailed it up as the price moved up. Got a bit too aggressive, you could argue, last night. I should have really probably stopped it at least below the day, but it's Friday, it's Thursday. We'd had not a great week, so I'd pulled it up to the above the, it was originally here at target 1, the 50 period on the 4 hour, and this morning, I can't remember where, I think I pulled it up, it was on the 1 hourly chart, wasn't it? It was, this is where it was, I think it was around about, yeah, when we pulled it up, this was the 50 hour, when I did this first thing this morning, it was the 50 hour period moving average, and I say we've come to, that's been taken out in the 11 o'clock candle. So at 12 o'clock we got that final half of that position closed, but we hefty 120 points on that FTSE trade, so that's a nice combined trade. 70.42 and whatever it was, I can't remember what the second lot was. It's on the Discord group. Yeah, where did we say? Remember my Discord group. It's here under the trading strategies there. Can you see that? Okay, I don't know how that looks on. If I can zoom in. Let's zoom in. Should be able to, shouldn't I? Zoom, 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 zoom. Has it gone? No, it's not zooming up. It's not working for some reason. But anyway, there's that. UK 100. Sorry, wasn't it? There we are. Yeah, it was. It was the 50-hour moving average at 89.19. It's just reversed to it this morning. That's 79.5 points. Total gain of 121 points. But overall, we're down for the week at the moment. Down 37 points so far for the week, and down 52 points for the day at the moment. And yesterday was a losing day as well. But that's the way it goes sometimes. You've got to take the rough with the smooth. Let's have a look at next week. Next week is really all about, whoops. I don't want to move, there we are, can you see that? What move down. Next week is all about inflation week. So let me just bring in next week. On here, so 13th through to the 19th, how we apply filters. Taking all the filters still on. That's okay. Very good. Let's keep the filters for a change. Quiet Monday, Tuesday. Not a great deal going on. We got some data out of China earlier overnight to start the week. Inflation from India. So it's inflation week, so India and some other PPI data from Switzerland in the early in the European trades. GDP from China on Tuesday morning. ZEW, again, it's been whacked, but it's getting better. How the businesses are feeling in the United States. But the main event of the week is the CPI data coming out of the United States. The president says there isn't any CPI, there isn't any inflation. The Fed should be cutting rates by 2%, 2.5%, whatever his latest announcements were. It's far too high, so we'll see what the data says on Tuesday. Key. Also Empire State on Tuesday. So Tuesday is the big day for data next week as far as the main, the world's biggest economy is concerned, the United States. Canadian inflation also at the same time on Tuesday, so that adds to the nuance, adds to this announcement from yesterday, and Carney and Trump's relationship will be tested again. Watch for comments from the key hawks on the Fed as well next week. Obviously, we said we had Waller, and Michelle Bowman's the other key one as well. So she's speaking also on Tuesday. So key day Tuesday. Wednesday sees inflation out of the UK and PPI from the United States. The weekly oil inventories. Remember, we had that huge build this month, this week, 7 million. Those of you that trade oil. Thursday brings a central bank announcement next week, isn't it? It's also it's the EU, isn't it? What we're talking about, ECB. I knew it was coming. Here we are. CPI from Europe on Thursday. Weekly claims, and also we've got. Is that next week? Oh, it must be the week after. Sorry, the ECB's announcement. Yeah, it's not. I'm a week ahead of myself. Sorry. Thursday is, yeah, it's just inflation day. Ignore me. Philly Fed as well on Thursday. So we got weekly claims, Philly Fed, and retail sales on Thursday. So big day Thursday as well. As far as the data is concerned, right in the middle of the month now, the 17th of July, right in the middle. The big holidays, schools start to close down in Europe for the summer holidays. Friday is the official end of the week, and we've got the key University of Michigan inflation and consumer expectations data. So quite a week, really all focused, or not all focused, but certainly most attention will be focused on Tuesday and the inflation, and then the markets will start to close down, or not close down, slow down. Volumes will reduce, so people start taking holidays from next week. Certainly, that's the key date, and then we get into the fallow sort of end of July, August term. So the end of August, we have the big meeting out in Jackson Hole for the Fed. So we've had the Sintra one in Portugal for the ECB. So the Fed did the same thing at the end of August, ahead of the Labour Day weekend, which is the first of Monday, the 1st of September this year, and then suddenly the doldrums of the summer end, and we get into September, October, November, December, into the year end, and everything kicks off again. So what there's a lot of things can happen between now and then, obviously. So anyway, that's next week. It's inflation week. Put that in your diary. We'll be live for most of these events. I've got some webinars on Monday and Tuesday. We're doing a scalping part 2 on Monday. I can't remember what I'm doing on Tuesday, but no doubt it'll be fantastic. So take care, everyone. New guys to us. If you've not got a position, we're very transparent, we're very open, we're a bunch of grown-ups here. Phase 1 or phase 2 or a single step challenge, it's up to you. They're all available. Standard or pro, it gives you the ability to have a profit share up to 90%. The targets are a bit more tighter, a bit more aggressive. Most people end up in the middle, as with most things, taking the two-step challenge. Obviously the one-step. Again, the targets are a bit more aggressive, so people end up plumbing for the midpoint. And if you're new to us, it says on the ticker below here. Actually, the ticker's not on, is it? Put the caption on. I should have that on. See on the ticker running through here, 25% of all products. If you type in new 25, so if you've not had an account with us before, new 25 gets you a huge 25% discount on any of these products. So, if you can afford a few $100, get it invested, get it spent. Less than $200 gets you $25,000 worth of equity. If you got a bit more, 340 gets you 50,000. You get 25% off that. It's just $250. Gets you £50,000 worth, dollars worth of equity to trade with, and the standards, regardless of the size of your account, the percentages are always the same, and that's the key thing, guys. So if you can do this, if you've only got $50 or so, and you want to, start with a $5,000 account, for less than $40, just over $40 with a 25% discount, gets you $5,000 worth of equity, and the rules are still the same. 8%, 5% on the second step, and a 80% profit share of any real money that you make in your funded account, and that is real funds that come back to you. As I say, Friday is payday here at theproptrade.com. So that's all for this week. Take care, everyone. If you're not, we just launched a new thing today. If you've already had an account with us, I think it's Get 15, is it? Yeah, I should know, shouldn't I? Yeah, there we are. So 50. If you've already had an account with us, you already had a 25% discount. You want a second account or another account? Get 15 gets you 15% discount off a whole range of products. So we're nice to you the first time, we're still nice to you multiple times thereafter. But these are very well priced anyway at full market recommended retail price, because you're dealing with a very open, very transparent company here. There's no consistency charges, no swap fees ever. Check it out. Check out the website. Check out the terms and conditions. They're very clear. There's nothing to hide. Some brokers, have lots and lots of small print. We've got nothing to hide here. Do check out what's available. The spreads and what you can trade. See, no swaps at all on anything across our range of assets. Up to leverage of up to 100, particularly 50, some typical spreads, some tight spreads on some products, but again, understand what you're trading, and come and give it a go. Now you got nothing to lose other than $50, $100, but the beauty of trading is once you get it, and anybody can do this wherever you are in the world, whatever your level of education. People think, I don't understand the economics too much. I don't understand what you're talking about, Stuart, at all. You talk too quickly, and I haven't got a clue what you're talking about. Anybody can, understand, charts. Anybody can see, well, this is above the green line. I want to be buying it. It's under the green line. I might be selling. Oh, it's gone back over the green line or the red line or whatever it is. Keep it simple. Keep it to a level that makes sense for you, because everyone can have an edge trading, and it's finding an edge, following your process, keeping to your rules, not getting too scared, not getting too full of yourself when you're winning, and always managing your risk. That's what successful traders do, day in, day out. Okay, simple as that. Okay, take care, have a great weekend. I'll see you all again on Monday. All the best, everyone. Bye bye.